like I was saying, I think it's we were using three words earlier: rebalancing, volatility, and uncertainty. And I would say, maybe another word which is a synonym for these could be turbulence, also, because volatility is one thing, and turbulence are one and the same, of course, but turbulence tends to, generally, at least in the way I look at the word, tends to be a little bit broader, even to cover, political unrests and things like that, which are happening all over the world, which are going to have an impact on the economy of the world. So I think it's definitely an age of turbulence, to borrow Greenspan's terminology. And I think that only thing that we can be confident about in India is that we are in a developing economy, we're in a growing economy, and the long-term trend is only going to be positive. There's no uncertainty in that. Maybe other economies, there's uncertainty whether they'll ever be a high-growth economy ever again. I think that's not the case for us. We can be pretty confident that we are going to be a high-growth economy. But there will be ups and downs. And some of that will be our own making, and some of that will be because of global events and happenings, is the way I look at it. I think, the global economy is kind of like, if it's doing well, it's like swimming with the tide. And if it's not doing well, it's like swimming against the tide. That's really the difference for us in India, because the long-term trends as far as demand for goods and services are extremely positive. We're yet to meet, in many of the areas, there's still a lot of room for growth. And I think that, ensuring that companies are innovative enough to bring out appropriate products at right prices, and, promoting those and creating the demand for those things is really the name of the game. And all of these other things is swimming with the tide or swimming against the tide.
You have achieved tremendous growth in the last 3 to 4 years. In Amara Raja Batteries specifically, if I were to take that as an example, has your approach to growth changed?
Yeah.
I agree that you've been very positive. You continue to be positive about growth, but has your
Yes, certainly. I think, when the economy collapsed, we definitely hit the pause button. Just like a lot of people, I certainly wasn't confident enough to continue without at least making a reassessment in terms of how is it going to impact us. We definitely lost our pace of capacity expansion for about 12 to 18 months because of that, before we realized that, okay, it's good we paused, but it's time to get back on the growth path. And we started investing again. So certainly it did make a short-term impact, in terms of kind of had to just take a pause and relook at the demand projections that we were looking at. It's definitely also made us more tentative in terms of getting into foreign markets, not just through export, but more of looking into expanding our geographical base. We have been looking at that strongly. And now we're looking at it strongly again, but I think I would have been happy if we had made some of those moves by now.
So one thing you're saying is that you've become more cautious, but beyond that, has any of the building blocks of your strategy really changed? Have you started taking a deeper risk lens to your business, for example?
Well, I think the only thing, if we look at it on our industrial battery side, we'd always been very dependent on the telecom industry and growth in the telecom infrastructure. And that's a cyclic demand, so I think we brought down our dependence on that, and by improving demand of other sectors like the UPS segment. Now we're a large player and market leader in the UPS segment as well. So I think, kind of diversifying our risk a little bit across broader customer segments. We've started to export a lot into Africa, so we're building a good export base in Africa as well. So the country risk of being just dependent on one country alone, we have been improving exports to about 25% of our turnover now, which is comfortable. And I think that's the level that we need to now look at international operations, as I was saying, instead of looking at going beyond 25% export.
So now if I were to look at your business, on one side you have sticky consumer prices, and on the other hand you have volatility, be it currency or commodity prices and all of that. and that gives you a cocktail where margin pressure is going to be the order of the day.
Well, fortunately, in our industry, it's a low-tech industry. Margins are thin as it is. Everybody knows that. Customers know that. And it's a commodity-based, the cost is driven based on lead pricing, which is a commodity. So when you have large fluctuations in lead, there's absolutely no way industry can survive if prices are sticky. So they have a tendency to not be sticky. We do have flexibility both in the consumer market and with customers, even with long-term contracts, where we have lead clauses, lead escalation clauses. So the price varies depending on the cost of lead, which is the major import and major commodity.
So that's very interesting. I mean, there's a lens of hedging and contracting. Both of those two levers that you've used to play the price of lead.
Yes.
Has your approach changed in the last 2-3 years? Have you in how you've approached these two problems? Have you become smarter about doing it? Have you?
Yeah, I think we've been looking at a lot more of. Earlier, we used to import a lot more of our lead. Now we've been sourcing a lot more through the collecting old scrap and getting it recycled. That's brought down our procurement cost a little bit because it's no longer just trading on lead prices, but more on conversion cost. So that, being more aggressive in that area has helped us. As the industry as a whole has been looking at getting more vertically integrated, so having a tighter control over the lead supply, especially if you're able to recycle most of your needs, you kind of de-link yourself from the commodity pricing to some extent. Not completely, because you still have to collect the scrap, which is again dependent on the commodity pricing.
The other thing is you have been very successful in building a great brand in India, and that is key to actually protecting your margins. So how have you looked at customer value addition in this market?
Well, see, I think Indian market, I don't know if it's unique, but it's very different from the West, at least, in that, organized retail still is at a very shop-by-shop, small shop type of level, where the brand of the product still carries a lot of weight to drive footfalls, more than the brand of the outlet itself. That's the primary market in India. Millions of shopkeepers is the primary customer for most manufacturers. Even manufacturers who have their own brands and distribution networks are first selling to millions of small shop owners as their primary customer. Now, those shop owners, as I said, the footfalls are driven not by any other brand than the brand that they carry, which is your brand. So it's very difficult to survive in this type of market unless you have a brand, because if you have to appoint a retailer, you need to give him something to attract customers with, because he doesn't have that capability to do it on their own. So the need for having a strong brand in a market like this is paramount, especially in aftermarket automotive market, where you have to, there are mechanics and other channels that have certain percentage of the market, but really the majority of the market is driven by people being aware of the brand and being pulled into the store because of that brand. So I think we recognize that, and we put a lot of effort into building that brand right from the beginning. It's been a consistent effort. We've never stopped investing in our brand building. I think the latest commercials are also, fairly successful commercials in building Amara brand. And that again is definitely helping us to do everything else that we're doing.
If I were to now switch and look at customer value addition from the B2B side of your business, what have you done there in the last 2 or 3 years?
Well, I think if you're looking at telecom market, the game is changing every year. The way that they procure batteries, the reason they procure batteries and electronics, what they bundle with what for what reason, it's a changing game. And we've been able to keep up with that and ensure that we remain relevant and we remain the best option for our customers because of the performance. But there have been times where the long-term performance of the battery was not at all a consideration, because the pattern of procurement and the accountability for performance was stacked in that manner, which I think thankfully has improved. I think with the way that now the business model stands, with tower companies controlling most of the infrastructure, they see the advantage of buying, high quality products and products that will last, as opposed to just meeting a specification. So I think that has helped us a lot in terms of being able to navigate in these changing procurement patterns to ensure that we remain relevant by offering, and being ensured that we got recognition for being the best value.
The other question that we've had is, we have for you is that when you look at your planning and budgeting processes, and let's say there's a long term, there's a medium term, and there's a short term, and you need to have a planning and budgeting process that runs across all of these. How has that changed for you in the last 3-4 years? Has it at all changed? In fact?
Well, thankfully, even before all of this started happening, we're already into a strategic planning process where, and we've been getting better at it every year. I think maybe in Amara Raja Batteries, it's maybe the 5th or 6th year that we're doing it now, where we try to take a look at a 10-year horizon in terms of what's happening in our existing markets and adjacent markets and technologies and things like that, to try to understand where what the future looks like, and then try to create a five-year plan based on that. So saying that, okay, if 10 years the world looks like this, in 5 years, where are we in all that, and what do we need to achieve in the next 5 years is really the horizon that we try to do. And that's a rolling plan. And that, I think, hasn't changed. I think the need for doing that has only been reinforced by the turbulence that the world is seeing today. And only thing that's changed is in terms of how we view the future is not as certain as it used to be. We do now look at a lot of different scenarios as opposed to one idea of what the future might look like. Now we say, okay, there's scenario 1, scenario 2, scenario 3. We don't know which one it's going to be. So let's be prepared for all of them.
So you're saying you've moved away from a deterministic view of the future to a much more of options and goals sort of.
And understanding that there are certain things that we can control about our future. There are certain things that we cannot. So let's not try to predict those things. Let's be aware of where we can drive the future on our own and be prepared for any eventuality along the way.
Now, if I were to switch to the other end of the planning process, which is the budgeting process, the annual plan that you make and you need to, against which your team needs to deliver. Now, what we have faced, what we've heard from other companies is that because the markets keep going up and down, the realities keep changing. And therefore, if you stick to the annual plan, which is fixed at the beginning of the year, you might not get the end result that you want. And therefore, you need to have a flexible budgeting process. What is your view on that?
Yeah, I think that anybody who's having trouble meeting top-line targets have to move into that mode. And I don't think it's the same all the time. I think, when you're having trouble meeting demand, you need to be in a more service-oriented mode. When demand is growing, when it's a growing demand in the marketplace, I think you need to be more service-driven mode, as opposed to a stagnant or shrinking market, where then you need to be more efficiency-driven. You definitely have to make sure efficiency is catching up to market share and growth and everything else. But I think that that's a much easier prospect than trying to gain market share later if you've lost growth in a growing market. So I don't know if that answers the question or not. But
for example, two sides of the coin. Some people say that by actually diluting your annual plan, you're diluting accountability. You're letting people away. So that's view 1. View 2 is that actually as the markets...
Well, no, I would say that, so you set very aggressive targets. If it's a company that's doing flexible type of budgeting, I would be surprised if they're not setting very aggressive targets, right? So if you're setting very aggressive targets, you tend to also set very aggressive expenditure to meet those targets. Now, the flexible budgeting is required more to control that expenditure in case the top line targets are not being met. Otherwise, you've opened the floodgates and it's all gone before you know it. Right? So I think moving to flexible budgeting is more when you're having very challenging top line targets which you don't have a history of meeting for whatever reason. Maybe the market growth isn't as much as you had projected. Then you've not improved your understanding of the market even now. So until you start improving on your ability to meet those numbers, this is an ability, I think, to ensure that at a top level, you're able to kind of control expenditure to meet the realities.
Now moving to the last item on the agenda, which is people. You as a company have focused a lot on people. So if I read your website, for example, there's a lot of focus on intrapreneurship as a concept. How has your approach to people changed in the last 3 to 4 years?
Well, I think as the company has grown and as a group, we've been diversifying. We've grown with a lot of talent that have been developed by us. I mean, if you look at people who are on our top leadership teams across the group, there are many people who've been with the group for more than 15, 20 years, who've joined the group as freshers and are now in leadership positions. Of course, there's a lot of very good talent that have come in over the years also at different points of time. But it's a good mix of talent that's been developed in-house and has been brought in at different points of time. So I think that, the need to develop talent and develop leadership, especially, to take on responsibilities as the group is growing is something that has got a lot of attention in the last few years. That, before that we were only looking at financial metrics, engineering metrics, production metrics as to go forward. And at that stage, that's what it called for. But I think now that we're looking at a different type of growth altogether and diversified growth, the need for strong human resources, not just in theory, but in terms of developing that talent in-house and giving them that exposure and training that's required at different points of time in their career is something that I think is a huge change for us in the last few years.
If I may ask you, could you define what is the leader that you're looking for Amara Raja Batteries?
Well, I think that, we've recently done an exercise where we've tried to introspect and go back to our roots in terms of what our core purpose, values, and things like that are. And I think that, what we've come up with as our core values over the years, which we've kind of to try to put into English basically, is innovation, excellence, entrepreneurship, experiences, and responsibility. And I think we strongly believe that those are the values that all of our leaders should be having. And I would be looking for leaders who can exhibit that kind of a value system and also a track record of performance. I mean, track record doesn't mean continuous successes, but we need people to be more entrepreneurial and take leadership as different from being management. And I think that's what the transition we're going through right now.
So as a last final question, when you look at the South Indian base of CEOs, the Indian base of CEOs, who are your fellow colleagues in some sense, what are your words of advice for them from your personal experience? Or your suggestions or thoughts for them?
I think that we're in one of the best markets possibly in the world ever to be part of, and opportunities are abundant. It's up to us to ensure that we're going after them in a manner that we can manage. I think that's also very important. It's easy to bite off more than we can chew when growth opportunities are so many, and at the same time, it's also, you feel foolish if you let some go by. So assessing your own capabilities to be able to go after the right opportunities is very important.